Hi, welcome to Charts Chatter with Chatur Charts, the 7th June 2022 edition. Right from the word go, the markets sold off. It was following global cues, global weakness of markets world over. And with crude oil at $120 per barrel, this was not completely unexpected. Bank Nifty also followed suit with and closed with a cut of more than 300 points to close at 34,994, and Nifty closed around 16,416 with a 153-point cut. So suddenly the tables have turned. 2 weeks back, we were bullish and the market rewarded us, and our target of 16,800 was met. The Bank Nifty target of 36,000 was also met. So what happened, and where did things go wrong? That Nifty has dropped almost 400 points from the 2-week high, and Bank Nifty has dropped more than 1,000 points from the 2-week high. So let's find out as to what are the pressures that are keeping both these indices down and inducing a sell-off. So this is the Nifty chart, and this was the bar of the big red bar that you see, which Nifty sold off. This was the Friday bar. And thereafter, yesterday we had a small morning start, but it failed to kind of capitalize on that. And today we had another bearish candle that got formed at the end of the day. So, and the additional thing is that it has also broken the rising channel support line. So that's not a very good sign though. But if one were to look at the hourly chart and find out why did Nifty go down, then one thing that comes up very clear is gap filling. And on its way up to test the 16,800 high, Nifty jumped from 16,200 and 359 close on the 28th of May, and it straight away jumped to the next day morning at 519 levels. So thereby, it had created a huge gap. So, and I will draw it out on the chart for all of you to see. Yeah. So this is the gap I'm talking about. This was the gap that got created. This was the gap that got created when Nifty tried to jump. And as we are all aware, that gaps, the indices or stocks don't like to keep gaps open for too long. And in all fairness, they try to quickly come back and fill the gap. So this gap had occurred around the 27th of May, and in less than 6 to 7 sessions, the index came down today to fill that gap. So if I were to extend this rectangle to the right side, you will see that this gap has got filled today. So had this gap not got filled, perhaps Nifty would have gone up and again come crashing down to fill this gap. So for the time being, I think Nifty has done its job. It wanted to fill its gap and it came down today. So though it tried 2 times to come down and fill the gap, it did not actually fill. There was still a gap of about 80 points left. And today's dip to the lower level of 16,380 odd or 370 odd ensured that that gap has got completely filled. So for now, though it looks a little unhealthy and with the daily chart not very attractive and the candle, red candle protruding right outside the support bar, things look a little grim. But I think we should take solace from the fact that the gap has got filled. And the other important thing is on the hourly chart, there has also been a bullish divergence that has been spotted. So the bullish divergences on the hourly charts are not very rewarding, but they could be the signal for perhaps a reversal. So the reverse bullish divergences generally reward in 2 ways. One, it rewards a reversal of about 30 to 40% of the fall at times. And in some cases, if that reversal does not last long, it provides a kind of a signal that selling may have stopped for the time being. So what conclusion do we make out of this is what I want to share with you. So the good part here, as I said, is that the gap has got filled. So that will be one worry less for all traders and investors. Now let's check out Bank Nifty and see what Bank Nifty has been doing. So in Bank Nifty, there were no gaps. Fortunately, why even when its journey upwards, it ensured that all the gaps were filled. And day before yesterday's candle, that is Monday's candle, yesterday's candle ensured that the gap had got filled. So Bank Nifty has been weak, but it is still, despite a cut of 300 points, relatively stronger than Nifty. So though I mean, it has not made a very good close. It has closed outside the support line, etc. So from a close standpoint, not very healthy. But the MACD is still positive. The stochastic is still positive. So possibly a reversal can occur. So on what data point do we then start hunting for to see whether a reversal is possible? So my attention gets drawn to India VIX, and that is one chart which I constantly review. So this is the India VIX chart, and this is a rising channel, as you are all aware. And right now, India VIX is at the bottom part of the rising channel. So from a overall volatility standpoint, though a number of greater than 20 sounds a little ominous, but no, doesn't look like in the near future, India VIX could kind of shoot up very high. This is based on the study of the dollar index chart. See, the dollar index also, despite being a little volatile, is still under control. So somewhere I get a feeling that with with the India VIX under control and dollar index also, though a little volatile but still under control in the 101 to 102 zone, Nifty or Bank Nifty could stage a sharp reversal from here in case the event tomorrow does not spell anything which is negative for the markets. Like for instance, the market has already priced in a 50 basis point rate hike by RBI tomorrow. So in case the RBI governor does not spring up any surprise which adversely impacts the market, probably the market may want to reverse and move back. So that's the reason why key supports today were respected. The Nifty key support of 16,340, 360 zone, and Bank Nifty key support of 35,000, both have their more or means respected. So this leads me to believe that in case there is nothing more untoward than the 50 basis point hike, which has already got priced into the closing price today, perhaps the market may stage a big reversal, is the analogy that I make based on the dollar index and the VIX and the overall chart pattern that is available to us. So in the next 12 hours or so, I think we'll be very, very clear as to what the market wants to do. So until then, let's wait and see what happens. I do hope that you liked this video, and please press the like button, please share, subscribe, and do let me know if you do want me to cover any other points. Thank you so much and have a nice evening. Bye-bye.